So I wanted to switch things up today, and I wanted to highlight I'm just going to throw in four of the most overvalued stocks that are very hyped up right now. So let's go ahead and just jump right into it. First off, the thing that I want to make very clear is that just because a stock is overvalued doesn't mean that you need to short it. A stock can be incredibly overvalued but still continue to rally. And that's the thing that I'm trying to emphasize is overvalued means that from what the company produces in revenue to what the company is actually valued at, there's a disconnect. And that's all I'm highlighting here, right? It's not to encourage you to sell. It's just to make you aware. And I'm going to talk about all four of them right now. So the first one is obviously Tesla. Tesla has terrible guidance for 2025, yet it's still going on a super strong rally where nothing fundamentally about the company has actually changed. The same concerns that we had a few weeks ago when it was selling off are still present now. We still have no robotaxi. We still have no full autonomous driving available. They're supposed to launch in July in Austin, Texas, where Waymo has already been for the past 3 years. Again, Tesla is great at making promises, but has not been the best at delivering. From what the company produces in revenue, and again, please, you don't have to agree with me. Just things internally for the company need to change. Tesla trades at 179 times its earnings, meaning that from what the company is currently valued at to what the company actually makes, Tesla right now for net income makes $6.1 billion. Yet the company, based off of recent rallies, right? Again, this happened last time. Based off of recent rallies, is worth $1.1 trillion in market cap value. Huge disconnect. You're telling me a $1 trillion company produces less than $6 billion in net income? Again, let's have some common sense, right? The company is not growing year over year, and the guidance for 2025, especially with all the trade war concerns, are still very much present. We'll see. We'll see with Elon coming back if he actually begins to turn things around. But I think that this is the very similar setup to what happened last time. It's not as big of a catalyst because, again, Elon is not affiliated with Trump for the first time ever, so we're not seeing it skyrocket. But just like last time, there was a disconnect from the momentum and the price to what the company was actually producing in earnings and in revenue. And that's why it pumped up, nothing wrong with that. But you need to understand that there was a disconnect. So at one point, it's going to peak just like a pump and dump and come crashing down, and ended up losing 60% of its value within a super short period of time. Now it's pumping up again. Nothing fundamentally has changed, yet Tesla is still incredibly overvalued. And again, please, the thing that I want to make very clear is it being overvalued doesn't mean that you need to short it. You shouldn't short it as it's still incredibly bullish and still pumping up. The thing that I want to compare it to is like a momentum play. It's still indicating signs of an uptrend. So you going against that trend can ultimately end up costing you a lot of money, especially when shorting. So let me make this very clear. This is not to encourage you to short by any means, because Tesla is still showing signs of it being bullish. So I just wanted to make sure that that was understood. Tesla's probably the most controversial one, the one that I think that everyone's going to just understand. First off is HIMS. HIMS has been performing well, but just like last time, it ran up to highs of nearly $73 and came crashing down to $22 when things were not looking so pretty during the trade war, right? This stock lost 70% of its value. And we all know, right? It's common sense that any overvalued company during a downturn aggressively and more aggressively corrects itself because it needs to go back more to a true and realistic value. HIMS, if we were to look at it, again, it's not just an opinion, it's a fact. It trades at 85 times its earnings. It's a current company with a market cap of $13.8 billion, yet it's a company that makes $164 million in net income, or $1.7 billion in overall revenue. Huge disconnect, right? This one isn't the worst, but it's definitely one to pay attention to. The reason that this one concerns me just as much is because of how quickly it's rallied before and how aggressively it's come crashing down. Again, just because it's overbought doesn't mean that you need to short it. This one shows a lot more signs of kind of like meme stocks, right? Where it pumps up aggressively for no reason, but just because a bunch of people like the stock. And I want to respect that. Make your money, but know that eventually, just like the meme stock movement, it peaks, the hype fades, and if concerns or uncertainty begins to get synced in, then we begin to see corrections, right? So at these overbought levels, again, ask yourself, are you actually buying into a good deal, or are you simply buying into the hype? If you want to buy into the hype and you know of all this risk, be my guest. Again, this video is not to deter you from not investing in HIMS if you actually see value in it. It's just to make you aware of the disconnect from what it's currently priced at to what the company is actually producing, which again, it's very obvious to see. The one that's probably the worst, and this one baffles me, is Tempest AI, because the only reason this thing began to skyrocket was because Nancy Pelosi bought it. And when it was announced that she bought it early January of 2025, it began to rocket. And again, just like anything, when the company, again, experiences a downturn due to uncertainty, this was the trade war, this thing lost 60% of its value. Now it's rallied up once again. It's still bullish. It's still experiencing some hype. Doesn't mean that you need to short it. But have you looked into their fundamentals? I mean, Tempest AI is literally laughable. If you search it up, TEM, and please do your own analysis yourself. If you look at TEM, this company loses $709 million in net income every year. It has a negative PE ratio of 16.2 times its earnings. And it has a current market cap of $11.67 billion. I don't think anyone can tell you. If anyone is selling you on the idea that this stock is the future, that should be a huge red flag, because fundamentally you can see that the company is not there. It's a company that loses money every single year. Don't let them compare that to big tech unicorns that started off that way. The only reason, and look into it yourself, back in January 20th, 2025, why did it skyrocket? Because Nancy Pelosi announced that she bought it. That is what you're buying into. The hype of a politician with a good track record, and that's what fueled this rally. So there's nothing wrong with trading a stock like this. Make your money, go long. It doesn't mean to short it, but understand that just like any momentum play, eventually it will fade. Again, the value does not actually correlate to the price. Huge disconnect. And then the last one that I want to talk about, this one's not going to be one that a lot of people might agree with, but it's one that still has to be stated. PLTR trades at 536 times its earnings. This company in net income makes less than $600 million a year. Remember, $600 million, less than a year. This company is valued at $306 billion, 1/3 of $1 trillion company, and it makes less than $1 billion. Huge disconnect. When they tried to convince you that this stock is the future, understand what this company's business does and the threshold it has. I mean, there's a series of different threads that you can read on x.com that make it very clear to understand that from where the current value is at $129 per share, Palantir would have to continue to double and double and double in revenue year after year after year for the next 5 to 10 years to even come close to this valuation, which it's not going to, because of course, if you understand what Palantir does as a company, you understand the threshold it has as a company. It just won't get there when it comes down to the actual revenue that it generates as a business. But again, it doesn't mean that you need to short it. It's an incredibly hyped up stock and Wall Street loves it. It's a great trading vehicle and I want to respect it, right? This is not a stock that's easy to short regardless. But there's a huge disconnect from the current price and market cap value to what it's actually earning as a company. You guys let me know down in the comment section. Again, in no way am I trying to encourage you guys to short this, because these are incredibly risky to short, especially as they're still incredibly bullish. You have to respect the trend. But just as risky as it is to short it at these levels, it is also incredibly risky to buy it at these levels once you understand the disconnect between the price and the actual value of the company. And again, those are facts, not opinions. So feel free to do a deeper dive, look into the fundamentals of the company, and ask yourself, are you okay with paying a premium and investing in these companies at these levels? And if the answer is yes, then great. At least you're aware of the risk, so you're no longer surprised. It won't be something that like, oh shoot, I wish I would have done a little bit more of a fundamental analysis and would have realized that, it wasn't actually worth that. If you do your analysis and you become self-aware and you still invest in it, then everything else that follows after is at least calculated and intentional. And that's all we want. So I wish you guys nothing but the best. Really excited to follow up. As a day trade, I want to make sure that this is very clear. As a day trade, I am shorting Tesla. I don't carry my shorts overnight. I just wrapped up my live trading session with the LPP team, and I'm up a little bit over $2,100 on the day. I trade live every single morning with my LPP team. You don't have to join, but it is designed for complete beginners. And again, we break stocks down just like this. And in this market full of chaos, if you like and prefer that structure, I'd encourage you to check it out. Second link in the description down below. You can sign up and it breaks down to a little bit less than $1.35 a day if you sign up with the second link that's discounted right now. Appreciate your time like always. Let's make sure that we end the year on a green note. Take care, team.